Good morning, market mavens. Welcome to Market Pulse, where we cut through the noise and surf the real waves of opportunity. Today, December 3rd, 2025, the market started strong, but then the ADP National Employment Report hit. Private payrolls dropped by 32,000 jobs. Treasury yields fell immediately, and if you watched yesterday, you already know why. Cheaper cost of money means the risk-on crowd gets a green light. What happens next? It all comes down to flow, the tidal force we've been talking about nonstop. A rising tide lifts all boats, an ebb tide exposes the rocks. There is profit potential in both directions if you know where to look. I believe buyers return fast, maybe even by the time you're watching this. Short-term S&P 500 call options or a speculative 2x or 3x leveraged index fund for the day could be very interesting. Let's do a lightning round on 4 names moving the needle right now. Tesla. Shares closed around $430 yesterday, riding a 5-day winning streak and testing 2025 highs. Europe's sales softened, but China deliveries jumped and Elon is already talking about doubling the robotaxi fleet in Austin next month. Break $489 resistance and the bulls take full control. Vertex Pharmaceuticals surged more than 6% to $459 after Morgan Stanley started coverage with an overweight rating and a $516 price target. Year-to-date up 13%, market cap $110 billion. This is still the undisputed leader in cystic fibrosis and pain treatments, and the pipeline is stacked. Walmart, trading at $111, inches from all-time highs and a $900 billion valuation. Black Friday crushed expectations. Artificial intelligence-driven holiday ads are working, and on December 9th, they officially ditched the New York Stock Exchange for NASDAQ, the clearest "we are a tech company now" signal you'll ever see. Apple closed at $286.11, flirting with record highs. Price to earnings around 37 feels rich until you see analysts forecasting $314 by year-end. China manufacturing numbers were soft, but iPhone's 17 margin expansion is already baked in. If the Federal Reserve cuts rates again in December, Apple leads the charge higher. Now the story that has me absolutely fired up: BlackRock's top leaders, Chief Executive Officer Larry Fink and Chief Operating Officer Rob Goldstein, just told The Economist that tokenization will transform finance the same way the internet transformed everything in the 1990s. We are talking about putting stocks, bonds, real estate, private equity, literally every asset, on a shared, instant settlement blockchain ledger. BlackRock's own tokenized treasury fund already has $2.3 billion in assets. The entire market expected to grow from $2 trillion today to $13 trillion by 2030. This isn't science fiction. It's fractional ownership of skyscrapers, 24/7 trading, and one unified wallet that holds both dollars and digital assets. Regulations have to be bulletproof and chains have to talk to each other, but when that happens, game over for inefficiency. And guess who already understands this better than almost anyone? Elon Musk. Cheapest electrons win, and tokenization is financial electricity. Get in front of that freight train.